What is up, people? Miles here with Keep the Change, and today we're going to be talking about my biggest stock market mistakes when I first started out investing. And if you don't hit the like and subscribe button, you're going to get spam called relentlessly until like 3 a.m. or something bad. I don't know.
Keep the change, you filthy animal.
To give you an idea of how long I've been investing, I've been in the market since 2016, back when Tesla made no money and, well, people thought Trump could be president. Different time, I guess. I first opened up Robinhood on November 7th, 2016. 4 years ago at this point. Kind of insane, to be honest, if I'm looking at it. And let's see my very first trade ever. And the very first stock I ever bought was Ford. Ford Motor. Can you believe that? What a pick. What a godly pick. Now, obviously, I had no idea what I was doing. No one really does. You just gotta jump in, get your feet wet, you know what I mean? So, I would kind of day trade. And I've got to say, this is a horrible strategy. 90% of day traders lose money. Fact. Just to give you an idea of how bad day trading is, let's look back and cringe. I bought Amazon back in 2017. 3 years ago, before anything. And I bought it at $827.99. I bought 6 shares for $4,967. And all I wanted was a quick buck, a quick penny, if you will. And I got it. I probably got some profit from that, to be honest. But here's the thing. If I had held that, I would have an immense amount of money, an insane amount of money. I mean, I hate myself every day for it. Jesus Christ. I would have had $19,800. That is more than my entire account worth right now. Now, here's a good one. Here's a really great one that I'm glad I sold. Tesla. Good old Tesla. I bought 17 shares. 17 Are you kidding me right now? About 17 shares for $310, and I sold it. Now, if you're new to stocks completely, you might not know, but Tesla stock has gone higher than when Elon went on Joe Rogan, if you know what I'm saying. Tesla right now is sitting at a pretty $1,895. Let's just round it up to $1,900 for fun. 1,900 times 17, that's going to give us $32,000. $32,000, and I initially had $5,000 worth. So if I just held my money, I would have 6 times it if I had held the stock. And instead I sold it. Because I wasn't thinking long term, I was thinking short term. I was thinking, how can I get more money tomorrow? That is not what investing is about. Investing is about buying something, letting it sit, letting it, build up, and eventually you cash out. Not that you cash out the next day or the next week or even the next month. I mean, you want to be in these stocks for years to come because that's when the gains come. Tesla stock did nothing for years. I remember it was in the 300 to 500 range, I think, from like 2016 all the way up to 2019, and then it just went nuclear. It just went insane, out of the stratosphere, And if I just held, I would be in a good position today. But no. I had to sell. And that's the number one problem, is people think that they can just buy into a stock and sell it the next day. No, that's not how it works. You got to think longer term. You got to think more about this stuff. The second biggest problem that newer investors have is being scared. Now, what do I mean by this? Well, back in 2018, I remember that the stock market crashed. And by I mean crash, it went down, okay? It didn't really crash like when the pandemic hit, but it went down quite a bit. And I remember people running away, being fearful. But in reality, when stocks are going down, that's when you should be buying. Now, this may seem obvious, but you'd be surprised. A lot of people get emotion caught up into it. And there's this great Warren Buffett quote about how stocks are like the only item where if the price goes down, we get sad. I mean, he basically used an example. He said, if you go to like McDonald's and you want a burger, the burger was $1 yesterday, now it's 50 cents. You're going to be excited. You're going to be like, wow, this is the same thing, right? But it's just cheaper. And that's how you should view stocks as well. You shouldn't view it as like, oh no, I'm going to lose my money. You should view it as this is the same company, just being even more undervalued than it was the day before. And now I can put even more money in, own more of it, and eventually those gains will come back. You can't be scared. Scared money doesn't make money, people. Come on. My third and, fourth biggest mistake in the stock market was following what other people do and not diversifying. What is my example of this? Well, back in 2018, there was a little stock called Micron. It was looking to blow up. I remember everybody on Reddit was talking about it. Wall Street bets threads everywhere. Call options out the wazoo. It was great. A great time. A great era. So, of course, what did I do? I said, I don't know what this company does, but I know a bunch of people on Reddit like it, so might as well buy it. And sure as hell, they were right. They were actually 100% right. The stock went up to $60 from around $30 a share, and I looked like a genius. That's until 2018, later in the year, when the stock crashed back down to $30, and I looked like an idiot. I invested in something that I had no idea what it even did. If you can't even explain what the company does, you have no reason to be investing in it. You may be saying, well, what do you mean you didn't diversify? Well, I put all my money into this stock, so I looked like a genius on the way up, but it also hurt me on the way down. So when the stock crashed, I lost an absurd amount of money, probably around $3,000, which doesn't sound crazy, but to me at the time, it was a lot of money. And I could have used that money on anything else. If I just diversified, then I could have cushioned the loss. I could have taken a much smaller loss. But instead, I put my whole portfolio in on this one stock that I didn't even know what they did. And I just took it off, some word off Reddit, basically, off Wall Street bets, what a bunch of gods, that this was going to go up. And surely enough, that went poorly. So always make sure to do your own due diligence. And remember to diversify. So if your stock goes bad, that it doesn't kill your entire portfolio like it did to mine back in 2018. Hard lesson to learn, and I had to learn the hard way, so hopefully that helps you out. My fifth and final mistake that I'm going to share with you when I first started investing, or even recently, really, this happened to me, is looking at a stock price and thinking, that stock is way too high. Take, for example, Tesla. I remember seeing Tesla hit 900 a share, and I thought, wow, that is about to crash. I cannot believe it. And my friend went ahead and bought a share of Tesla. And I said, this guy is an absolute idiot. And little did I know, I was the actual idiot. See, Tesla stock went from 900 to 2,000, as we discussed earlier. And you got to understand, just because a stock is high doesn't mean it can't go higher. Now, how does this apply to newer investors getting into the stock market? Well, a lot of investors are scared to put money in because they say,
the market's overvalued, the stock market's gonna crash, oh my god.
And the big crash never comes. It's better to constantly put in money no matter what the price is. Even if the stock market seems high to you, even if it seems low to you, it doesn't matter. You just gotta keep on putting in money. Because research shows that the longer you stay in the market, the higher chance of profit that you're actually going to get. So basically, time is on your side. If you don't start today, then you're not going to start and you're going to miss out on the gains. See, the people who always think, oh, well, I'm just going to wait, I'm going to wait it out. Sure, they minimize their losses. They don't have to go through something like the pandemic where the stock market went down 25% in a matter of a month, but they also don't get to ride the gains back up. And then they miss their chance. They look at the stock, they see it go down, they say, I'm just going to wait 1% more. It's going to go down another 1%, then I'll get in right at the bottom. But here's the thing. Nobody can time the market. Nobody can know when it goes to the bottom, and nobody knows when it goes to the top. So your best option is to just keep investing because, as we know, the stock market returns 7% annually. So yeah, sure. Some years might be down, some years might be up. But in the end, if you're holding it for a longer time horizon, you're going to be good in the end, regardless of when you invest. And just to make that a point, let's look at this. So this chart shows two different investors, both investing in the S&P 500, which is the 500 biggest companies. It's basically what people call the stock market. It's what that is. So this chart basically shows people putting $10,000 in each year, one of the investors putting in on the highest day of the market and the other on the lowest day of the market. Even if you bought on the highs of the year, for 20 years in a row, you would still come out with a 6.5% return on average. Whereas if you picked the exact best days to invest, the exact bottoms of the market every year, you would come out with a 9% return. So obviously that's better, but the thing is you don't know where the bottom is. And you also don't know where the top is. The chances of you picking the top is very slim. And same with the bottom. So your best bet is to just keep on putting in money. If you're adding slowly, it doesn't matter when you buy. It doesn't matter if the stock market is super high. It doesn't matter if it's super low. You just know that it's going to be higher in the future. Now, of course, some years are going to be down. Some years are going to be up. But really, none of us can predict it. And to sit out of the market and say, whoa, this is too high, I'm going to wait for a dip. The dip may never come. You may be sitting on your thumbs forever and then losing your money to inflation. And that is no good. You do not want to do that. Thanks for watching. Remember to like and subscribe. I love you, okay?